Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1945th edition of Short-Term Trading Live with Oscar. Good evening, traders. Sunday evening, this video, the 1945th, coming at you on a Sunday evening, and this is for trading June 3rd. That says June 6th. This is for trading June 3rd, Sunday through Monday, 2019. Traders, you should know, if you don't, this is a very risky game. Don't get divorced over this, kids. Make sure you do not trade with money that you can absolutely afford to lose. If you cannot afford to lose it, don't put it in your account. If you do not trade with stops, don't trade at all. If you don't know what you're doing, please come down to livewithoscar.com. Hang out with me in my live trading room where I can help instruct you and educate you in how markets work and how to behave and keep yourself from getting hurt. Hopefully how to make money as well, but we're more concerned with keeping ourselves from getting hurt. Put your stops in first, and remember, you can lose way more than you had planned if trading futures or options, so just be careful out there. So what is going on, traders? You're going to like this video. I'm only going to show you a few charts. I had a bunch of charts to show you, but it turns out that my very capable editors, they're always reliable as well, happen to be away in Utah today, so I'll have to do one of these screen shoots for you. But I've got a few charts out of the pile I had for the regular shoot, which I think you'll like. So let's get going. Dow Jones Transportation Average double top. Do you remember this, traders? The double top started this whole mess. Down we go. Coincides, of course, with Donald Trump putting tariffs on China right here at the red circle. Well, actually, the tariffs were here. Chart knew it first. Tariffs came out next week. And lo and behold, believe it or not, this right here was the first round of tariffs in 2018. January, I think it was, of 2018. First round of tariffs on China. This drop occurred. You'll see more of this in a moment. So now we've got the double top, and it just coincides with the second round of tariffs. That's the way things work, so that's what it is. But what's happened here is you've broken through the OMNI, smack down. Look at this, through the OMNI, down, down, down it goes. But where it gets interesting now is you see this red line? This represents what were previous lows before we got down all the way through here. So what I'm getting at is this. This chart was going up for quite some time and had a really nice channel going this way for some time. Now, if you break a channel, it's okay to dip, but it's not okay to dip lower than your previous lows. So we broke the channel, it goes away. But now we've gone lower than our previous lows, which would have been this red line. Boom, 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 with a left open gap. Looking ugly there since the double top. That's in your Dow Jones Transportation Average. I want you to look at another chart you've seen in many videos. Let's go over here and look at this chart. I dubbed this chart Masterpiece, but you haven't seen nothing yet. Wait until you see the next one. So, as I mentioned in that last chart, but now we're out to a weekly, Jan 2018 were the first round of Chinese tariffs, and the market caved for 3,300 points, and you've seen this before. And then we had our recovery. Actually, let me not confuse. This needs to go away. And then we had our recovery, and that created a double top, that recovery. Boom, and you dropped 2,500 points down to here, rallied up, and continued lower. But I'm only counting the first 2,500 point drop. Boom, 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 to here. Yes, we went lower, but we'll just talk about that. Let's not get nervous yet. Now, second round of Chinese tariffs come out right here at what's considered the double top. Maybe you could call it a triple top, but right now these are two double tops as far as I'm concerned in a row. Tariffs come out and we start to drop. Omni makes a prediction that we would drop at least 3,050 points or drop to 23,600. We were at 26,689, somewhere up here. And so we've got our projection. This line represents the projection inside this box where we think we could get to. That would be down 3,000 points shaved off of this from the double top. So 3,300 points on the first one, 2,500 points on this jolt. I'm calling this one 3,000 points when it's finished. We're down 1,877 points as of Friday's close from the top of the double top. Now I'm going to show you something that only my true fans will remember this, because I show it every few years this chart comes out. This is my true masterpiece. I call this chart masterpiece, but this is why you guys hired me. I mean, this is my true masterpiece right here. Check this out. This chart I've been working on for years. This chart goes back 40 years. And what's it go back 40 years of? Fed chairmans. Now follow me on this. This is fantastic. They're not all on the chart because I can't display them all, but if you go back on this chart, you will see right now, you see Bernanke, you see Yellen, you see Powell. Well, you will have seen on this chart everything from Paul Volcker, every Fed chairman from Paul Volcker back in 1979, Alan Greenspan, Ben Bernanke, then Janet Yellen, now Jerome Powell. All of them are on this chart listed. You just can't see them because we don't have the time, and I can't show them to you on the chart. However, it all looks like this. And I went and counted from the day, I guess, from the day of the appointment when we get a new Fed governor, 20 months till the top comes after Bernanke comes. 20 months till the top. And we crack. Boom, 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 boom. Ben Bernanke. Then we get Janet Yellen, and guess what happens? 20 months, and then we crack. Now we have Jerome Powell. We were on month 16, kids. We're in month 16. Generally, it's 20 months, but now here's where it gets interesting. If you go all the way back to Paul Volcker, Alan Greenspan, Bernanke, Yellen, and Powell, you will find that over the course of 40 years, the time which I was able to research and qualify, the average length was 17 months until the crack came. Now, the last three were 20. But if you go back to Alan Greenspan, he became the Fed governor in 1987, and we had a crash of 1987. So he distorted it, and it made it 17 months till the top is in. On average, 17 months for the last 40 years. Bernanke went 20 months, so did Yellen. Powell's on month 16, kids. This is truly chart masterpiece. I've been using this chart year after year. I had a fantastic kid, Mike Donatelli from Chicago, working in my office. He used to see this chart and say, Oscar, this is just amazing. How do you pull this stuff off? I went all the way back 40 years, labeled everything. 20 months till the top, usually 17 on average. We're in month 16 for Powell. Just thought I'd show you that. On top of that, we've got an inverted yield curve. You know that, right? We've got an inverted curve. The 10s and 3s, the 10s and whatever you want to look at, are the 10s are lower, or the long term produces less income or yield than the short term. We have an inverted yield curve. We've got 16 months of a usual 17 months to possibly 20 before a crack comes. We've got companies that are getting listed and have been listed that never made money in their entire being, get listed on our stock market and become worth $50 billion overnight, announce they may never make money, and these things go up anyhow. We've got all the same signs that we've had in place when we've had markets come off a little bit. The signs are building, kids. We're on month 16 of Powell. We know it doesn't last too much longer than that. The Yellen drop was smaller than everyone else's drop, but everyone else had a big drop after 20 months, or 17 months, if you will. So just keep an eye on these signs. Traders, you have me here to let you know when it's going to happen. The OMNI called the crash of the OMNI called the crash of 2008 to the number. It called the recovery. You know, don't worry about it. We'll keep you in tune. When it's going to happen, the OMNI will probably let us know, because I spend my life looking at things of this nature. So I wanted to show you this chart. I don't break it out that often. Keep it in mind. And then I'm just going to bring you back to the commodities for a moment, because this is something I told you about in Friday's video, Thursday night for Friday. So let's go see what's happening. Thursday night for Friday, I basically said we're getting short indices. You can get long bonds, you can get long gold, you can get short CMG, which is Chipotle, and you can get short, what else were we looking at? Tesla. All of that worked out from Thursday night to Friday's trading. And now gold has exploded. But what I wanted to show you about the gold chart is this. You got above a major resistance line, which has become support. Never got close. I mean, got close, but couldn't get above. Never even got close. Failed miserably. Where? At the OMNI and at the trend line. But this time, look. So you put a red circle there, but look what happened here. Above. Now, on Friday, this line didn't exist, kids. I gave you this before this line was here. So we were down here. Now, boom, we broke out. And now we're above the OMNI in gold. And gold looks like it wants to take off this evening. So keep your eyes on being long gold. Keep your eyes on possibly still being long bonds. And certainly we're going to be shorting rallies in the U.S. indices for trading on Monday. That's the video I wanted to show you, traders. Please keep all of this in mind. Join me in my live trading room. It is free, no credit card needed, no nonsense. Just come on down to livewithoscar.com. Grab yourself a free membership. Again, no credit card is required. Just put in your username, password, and join me in my live trading room. We'll get through this market debacle together. Remember, don't fall in love with the downside. This is just a readjustment in price for the Chinese tariffs. And keep your emotions out of trading. You want to keep my emotions out of trading? Say this to yourselves loud enough so that I can hear it. Say this to yourselves every morning, every afternoon, every evening. And you know what that is. Stops are in. Emotions are out. Traders, we love to tell it like it is, so come join us at livewithoscar.com and keep yourself safe in these rough and tumble markets.